travel isn't just about destinations, it's about the people you meet, the cultures you immerse yourself in, the stories you carry home. I'm Relebogile Mabocha, and on my travel feature, I take you on a journey beyond the guidebook. Each week, I connect with fellow travelers, insiders, and storytellers to bring you the heart of every place. Whether it's a hidden gem right here in South Africa or a dream destination abroad. Join me as we travel through conversations, memories, and inspiration. Listen wherever you get your podcasts.
The Money Show.
Personal Finance with Warren Ingram.
And of course, Warren Ingram is a certified financial planner at Galileo Capital. Well, one of the things, there are a couple of things that you'll hear Warren say from time to time. The one is we all know the D word. I'm not going to say it now. You know what it is. There's another word which you will often talk about, which is about preparing for the future, which is sort of around, and I suppose the catch-all word would be insurance. He will talk about a fund that you need to have. He will talk about ways to protect yourself from events. And tonight, Warren is going to be looking at the issue around insurance. Warren, good evening. I have to say, I was looking at insurance premiums today as it happens, and just thinking they've been going up awfully fast. And actually, I'm not always convinced I'm getting the best value for money from my insurance, and I think insurance companies know that feeling.
They do, and it's, I feel like they can sell a new form of insurance, which is insurance against our political leaders causing even more instability. So for me, I think understanding insurance, there are two things that work sometimes in our favor and sometimes against us. Once we've been a client of a particular insurance company for a while, what happens is every year our premiums go up, if not with inflation, might even be slightly higher. And when we don't claim, then we become so-called good clients of insurance companies. We're not claiming, which means we're profitable for them, and they just continue to raise the premiums. It's very rare that an insurance company will look at an existing client and say, "Gee, how can I find a way to make this more affordable for the client without reducing cover?" So it's true that sometimes you end up with very expensive premiums, having done nothing wrong, simply because the insurance company is adjusting its books. And sometimes insurance companies make mistakes. They realize that they've actually been a little bit too lenient with their premiums. They haven't covered their risks enough. And so to try and recover those and to build up their balance sheets, they escalate premiums much faster. It very often happens in the short-term insurance business, where they realize, for example, that they haven't been underwriting 25-year-old males who drive certain cars at certain times of the day or something like that, and so those particular groups of clients suddenly end up getting a huge increase. And if they leave, the insurance company is not unhappy, because those are potentially clients that are claiming too much. The same applies to life assurance or disability. At other times, insurance companies realize they've been a bit stingy and have actually turned away more clients than they should have, and so they reduce their premiums in a way to almost buy clients. So we need to be aware that insurance markets are dynamic, and when there's been a period of lots of claims, for example, after COVID, when there were lots of life assurance claims, it means that the insurance companies' balance sheets are a little bit compromised, and so they need to build up their balance sheets again, and so they're going to increase premiums faster. And the same with natural disasters and lots of claims happening in motor industry. For example, if there's hail in Gauteng, the insurance companies need to make it up again. So the market is enormously dynamic, and sometimes we benefit and very often we lose.
There are obviously different types of insurance, and you need to be clear about what you need and what you don't need.
I think it's just breaking it down as simply as I can, trying to avoid all the horrific jargon that the insurance industry loves to spout at us. So basically, I think we need insurance for our belongings. And, if your laptop is important to you because you're a knowledge worker, or your cell phone, or you have to, get in a car to go to work or to go around to earn a living, then those are the belongings that we need to make sure that we've insured correctly. And so, often they'll talk about short-term insurance. And so that's one form of insurance. And it's absolutely key for those of us who can't afford to buy everything and replace it all if our house burns down or our car gets stolen or something like that, which pretty much describes almost the whole population. And so that's one form. And then we need to ensure ourselves and our health. So, the government healthcare system is under enormous pressure, and I certainly wouldn't want to trust myself to a public hospital that might be underfunded, understaffed, underutilized in every aspect, except the long queues of patients who desperately need help. And so, getting a form of insurance, medical aid or hospital plan to make sure that you can get private care when you need it most is the second form of insurance I think we need to talk about. And then the last two you can package together. The one is our ability to generate an income. So if you're young, your biggest asset is probably not your car. It's actually your ability to generate an income for the next 20 or 30 years. And so making sure that you have insurance against losing that income because you become disabled is very important. And then lastly, if protecting our loved ones in the event that we die. So making sure that those who are financially dependent on us are taken care of. If we are the sole breadwinner and we die, they need to be looked after. So we need life assurance for that purpose as well.
011 883 0702 021 446 0567. Your questions around insurance, how to get the most bang for your insurance back with Warren Ingram this evening. Let's start with insuring belongings. And I think when we think of insurance, actually, most of us think of that first. There are obviously ways to make that cheaper. How do you start?
I think one, make sure that you're getting at least two, I think ideally three quotes every time you want to get insurance for something. And so if you want to check out your insurance, don't just stay with your provider and think that they're giving you the best deal. Go and get two other quotes, and then tell your provider that you've got two other quotes and they need to give you a new updated quote. But what you'll find, for the reasons I've mentioned a bit earlier, that sometimes a new insurer might give you very good pricing for exactly the same insurance cover that you've got right now, because they would like your business more than your current insurer does, and that happens quite consistently. So shopping around, and I think doing it at least every 2 or 3 years, it can often save you a lot of money. I just heard of a case this week of an elderly lady that lives on the coast, and by shopping around, managed to get her insurance premium to drop by 50%. Now, I suspect that's not going to happen to all of us, but if you haven't shopped around for your insurance for the last 5 or 10 years, there is a very good chance that you can get a big drop in your premium by shopping around. The only comment there is when you do shop around and you do get a quote, make sure that you're insuring the same thing. The insurance company says, well, yes, we will, repair your car, but only when you take it to this panel shop, and that's 200 kilometers away from where you currently live. So just making sure that you are comparing apples with apples, and then there is this term, an excess, which is the first amount of a claim that you decide to pay. So, for example, if you have a big claim of 100,000 Rand, the insurance company might say, for this claim, you need to pay the first 2,500 Rand, and that would be called an excess. Now, if you have spare cash available and you've got an emergency fund, then opting for a bigger excess is a really good way of cutting your insurance premium, because it tells the insurance company that you're not going to claim for every little thing, because you're going to have to pay for those expenses yourself out of your own pocket. So you become a better risk for the insurance company, and they know that you're only going to claim for big things, and hopefully those big things don't happen very often, those big claims. So opting for a very big excess, I think, is a very good idea. And then importantly, make sure that you don't claim all the time on your insurance policy unless you really do have a valid claim. Don't use your insurance policy as your spare bank, for when you want to change your phone and you don't like the one you've got now and you break it and then say, I need to claim against my insurance, this was an accident or something like that. Firstly, that could be fraud, but secondly, if you continue claiming, you become a bad risk for the insurance company, and they're going to charge you a lot more money than they used to. So be careful of your claims there.
We've got some questions already for you, Warren. One's from David in Pretoria. David, I will come to you in a moment. First, Mariam in Joburg. Mariam, hi. Your questions around life assurance.
Taking my call, Stephen, and good evening to Warren. I have a life assurance policy with one of the major companies, and I've had it for over 30 years. I have just picked up that when I get to the age of about, I think, 65, the death benefit ceases when I get to that age. And then secondly, also when I get to the age of about 63 or something, the occupational disability stops. Is this this is a policy that was taken kind of like pre-democracy years? Is this constitutional? There's something that seems rather odd, so that when I'm going to be needing these benefits the most, as I get older, they then decide to cease.
Would your premium? You're still paying a premium, I presume. Is that staying the same, Mariam?
Yes. I pay a premium. Interestingly enough, the premiums escalate to 10%. Not even
Mariam,
Mariam,
that's a fascinating question. Warren, is that standard practice when you get to a certain age? The occupational benefit stops and the sort of benefit stops?
The occupational benefit definitely is standard. So for example, just to talk about that, if you're in a position where you reach retirement age, and you've got insurance against your ability to earn an income, so sometimes it's called disability or income protection or an occupational benefit. The insurance company will say, and the law is that you can't insure yourself to be in a better position than you were before. So if you get to retirement age and you no longer earning an income, no longer earning a salary, you can't, for example, then have an income replacement because you are now retired, and therefore there is no income that you can replace. And so that's fairly standard. But I must say a contract is a contract. I guess that's the one important thing to understand here is if an insurance company sells you a policy and says we're going to insure you, and it's life assurance, but it's for a fixed period of time, then it's important to know that is a contract. They are undertaking an agreement to look after your life assurance for the next.
The Money Show.
Personal Finance with Warren Ingram.
Talking to Warren Ingram, co-founder at Galileo Capital, and of course we were hearing his answer to Mariam's question. Mariam's line has dropped, unfortunately. Warren, you're back with us now, but you were making the point that a contract is a contract, and some of this would be standard.
It would, and so I mean, my main comment to Mariam in this situation is, if you know that the term is coming to an end and your premiums are going up as high as they are and as fast as they are, it's worth shopping around immediately to see what you can do to get the same kind of cover. Especially life cover can run for your whole of life, and that's the term that you're looking for, is whole of life insurance. And finding out what the quotes would be, you might find that you will get a much better price. Now, if your policy is very old, which it sounds like it is, you might find that underwriting has got better, and so definitely worth shopping around. Life assurance can be shopped around, and certainly you should do that every 2 or 3 years as well.
Thank you for that, David in Tshwane. David, hi. Also a question around life insurance. Good evening.
Thank you, Stephen. Welcome back to 702.
Thank you.
My question is for Warren. Warren, my wife recently applied to increase the value of her life insurance, but she was declined as a result of a medical condition. So what would be a good alternative to increasing life insurance if that's a decline? Where would you suggest we place the money, or how do we generate wealth for our kids?
Yeah, that's a tough one. I mean, I think the first thing is to just try and take that. I mean, you can't argue with that insurance company, but certainly it's worth trying with one or two other companies as well to see if they will have a different outlook. So sometimes what one company might be overly cautious, where another thinks that the risk isn't as severe for them. And so it is one of the ironies that insurance companies often decline to insure us when we need it most. But that is the law of the land, I guess. Yeah. So I would number one, try a couple of other companies as well. It's worth the effort. If that's not the case, then taking that money that you would have been spending on the extra insurance and investing it into at least a kind of a good global stock market and South African stock market investment to try and get that growth for as long as possible is an alternative, just making sure you control the costs. The one thing about insurance is if you can build up your capital and build up your wealth, you have less need for insurance. So I guess that would always be my first answer, but that, that you do need time and you do need the ability to let that capital grow and compound in your favor.
Mm-hmm. David, thank you for that, and good luck to you and your wife through that. It does sound a little difficult. Just one or two other points on life assurance, if I can, Warren. I mean, when you approach an insurance company, and I presume you would get quotes from more than one, you do need to be very clear about what your conditions may be. You do need to obviously tell them.
We've seen so many of these kinds of stories where someone buys life assurance and pays the premiums for 20 years and then dies, and it often may be in an unrelated thing, a sheer accident or something, and the insurance company declines to pay, and their answer is because the person wasn't truthful at the beginning of the contract. And that's very important to understand, is the obligation on you as the client to provide full disclosure is there. If you know that you've got a heart condition and you don't tell the insurance company and you die in a car accident, the fact that you didn't tell them about the heart condition could be grounds for them to say, well, the whole contract was null and void and tough luck. Now, that's harsh, and I don't say I'm agreeing with it, but it's important to understand that is the deal. So full disclosure is really important, and then definitely you're right about the shopping around with life assurance. I don't mind talking to life assurance agents in this situation and being very direct with them to say, you represent insurance company A, give me a quote. Understand, I promise you what I'm going to do is show that quote to an agent from insurance company B, and I will show you insurance company B's quote as well, and you need to tell me why yours is better. And if you do that with three agents, they are well trained on each other's products and to point out the weaknesses of their competitors' products. So by the end of this, I think you'll have a very good idea of where your best cover is and if you're well paid or paying the right premium and well rewarded for that premium.
You make the point that we should shop around and get new quotes every few years, but you also say that life assurance is cheaper when you are young. So when you get older, is it still worth shopping around?
It is worth shopping around, but I mean, as we heard in that call, what does happen is, if you get older and you develop a condition, a chronic condition or some kind of a health condition, it could preclude you from getting cover from another company, and in which case then you shopping around is not necessarily going to help you if your policy is going to be declined as a new client somewhere else. So it is worth shopping around, and always making sure that the place that you're at is still charging you the best. And if you are in an unfortunate position where you become uninsurable, then at least you've got insurance along the way. But I always think it's worth keeping these companies on their toes and making sure that you're getting the best deal possible, just with full disclosure and making sure that you are comparing apples with apples when you get those quotes.
And then obviously ensuring your health, which we haven't actually discussed very much. I mean, I think most people, if they can, and we see there's plenty of evidence to back this up, if they can insure themselves for health and not have to rely on a government hospital, they will. What kind of schemes should you be looking for? I mean, there's certain pitfalls that people fall into.
Yeah, this is one of my bugbears. We somehow fallen into the trap in this country that our the thing that's supposed to look after us and pay our hospital bills becomes the thing that decides where we shop, where we exercise, how we eat, all of those things, and so we become so fixated on the loyalty programs that get attached to our medical aids that we forget that actually what we should be paying for is the lowest premium to get the most in benefit when we need to go to hospital. And all the other stuff is just nonsense as far as I'm concerned. So that's the stuff that distracts you from the core. And so what you might find is that you're paying for hospital cover that's getting less and less productive for you and giving you more and more so-called benefits elsewhere and actually losing sight of why you've got hospital plan in the first place. So I think, make sure that you're actually getting good cover. And then, fly your own, pay for your own flights, and don't worry about all the other stuff. Go and shop where you want to shop, and eat healthy because it's good for you, not because you're trying to do, get some kind of points and some kind of loyalty program, and then focus on getting very good hospital cover where you can. And I think that don't get manipulated, by great marketing schemes and great agents. Do what's right for you, and this is one of those things where I think the industry's gone a bit crazy, and we've been distracted in a huge way. It's marketing genius, but that doesn't mean it's good for us as consumers. And so for me, I certainly find a way to kind of ignore all those those loyalty programs and find the thing that's going to make sure that when I go to hospital, and I hope I never do, but if I do, I know I'm going to be covered. I know why I'm going to be looked after, and I know the company's going to pay the premiums, and not distract me with all sorts of other stuff. And COVID taught all of us a lesson. You make sure that you've got the best cover you possibly can, and all the other stuff becomes irrelevant when you're lying in a hospital. Who cares how many points you've got and where you can shop and what you can do.
And then again, obviously, if you join a medical aid scheme when you're younger, it's cheaper than if you do it when you're older.
Yeah, this is such an important point, Stephen. There are lots of people that operate outside of the medical schemes for a long period of time, and then later in life, realize that they're claiming more and more, or not claiming, but they're having more and more health issues, and then decide to join a medical aid. And that could be prejudicial for the rest of your life, because they're going to say you're a late joiner. If you've lived outside of the country, for example, and then you come back, if you haven't been a member of the South African medical aid, they can actually penalize you. And they don't penalize you for a year or two, they penalize you for the rest of your life. And so as early as you possibly can, become a member of a medical aid, even if it's a very low-cost hospital plan, and then stay a member all the way through. You can always upgrade a plan later. That's not difficult to do. But if you join late and you've never been a member of a medical aid, it could be incredibly expensive and just a cost that you might not be able to afford, even though you would now like to be a member in good standing.
Warren, thank you so much. Really appreciate that. Warren Ingram, financial advisor, co-founder of Galileo Capital with personal finance. How to get the most from your insurance back. I'm sure you know someone to send this podcast to.